If you're in the market to buy or sell a home in Gilroy and you can't decide whether this is the right time to make that move, well, hopefully by the end of this video, you'll get the answer you've been looking for. To anticipate what the future may hold for us, we have to understand the current market dynamics and the past statistics. Gilroy had historic growth over the last few years, especially after COVID. Right before COVID, the average price of a home was $860,000, and now it's at $1,137,000. Which means, if you're a homeowner, congratulations, your net worth just grew by 24% over the last 3 years. And if you're a renter, I'm sorry you just lost out on that 24% gain. This showcases the power of buying an appreciating asset. Before we take a look at what the rest of the year may look like, let's quickly examine the most recent sales data from last month. The month of June was another strong month for our Gilroy market. As I mentioned earlier, the average price of a single-family home was $1,137,000, whereas the average price for condos and townhomes was $790,000. Compared to last year, the average price of a single-family home is only down by 2.4%. On the other hand, condominium prices are up by 4%. On average, it took 21 days on the market for a home to sell, and the supply of inventory stands at just 1 month, which is remarkably low, and it goes to show that the market is heavily favoring the sellers despite high interest rates. The number of transactions have picked up as well, with 47 sales occurring in Gilroy last month, which is 12 more sales than the previous month. All in all, what this means is that the market is again favoring the sellers, and you can blame the lack of inventory for that. And now let's look at how the market is likely to behave over the remainder of the year. There are a number of reasons why I believe the market will continue to favor the sellers for the rest of the year, with few key exceptions. Number one, not enough homes for sale. A healthy housing inventory typically ranges from 4 to 6 months. If the inventory exceeds 6 months, it indicates more homes for sale and fewer buyers, resulting in buyer's market. Conversely, if the inventory falls below 4 months, it signifies higher demand and more active buyers. Currently, Gilroy's inventory level stands at only 1 month, indicating a scarcity of homes for sale and increased buyer demand. Number two, stabilizing mortgage rates. The market is realizing the fact that the mortgage rates will remain high for a while and may actually rise further in the near future before finally coming back down. So this new reality is finally settling in, and at the same time, buyers are exploring other means like adjustable rate mortgages as an alternative to 30-year fixed rate mortgages. Because ARM loans have lower introductory fixed rate for a specific period, such as 5 years or 7 years, before the rates begin to adjust on an annual basis. Number three, migration. Many higher income earners from major cities such as San Jose and other areas further north are purchasing homes in Gilroy. They view Gilroy as relatively more affordable, and they have the means to handle higher monthly mortgage costs or make substantial down payments. Those who sell their homes in San Jose can easily afford to purchase a home here in Gilroy due to the price difference. Number four, strong economy. Despite high inflation and rising cost of living, the US GDP experienced a growth rate of 2% in Q1 of 2023, and this trend is expected to continue for the rest of the year. The employment sector has done exceptionally well. The California unemployment rate currently sits at 4.5%, but if you look at the unemployment rate for tech workers, since our area is heavily influenced by Silicon Valley, the unemployment rate for technology sector is as low as 2%, well below the overall unemployment rate. The tech stocks are rebounding as well, which is giving a boost to people's stock portfolios. They can utilize the gains for down payment or save them as reserves. And for those reasons, I believe we're not going to see a housing crash anytime soon. The demand for real estate remains strong, there's lack of enough homes, and overall economy is performing well despite high interest rates. Now, if we suddenly see a shift in macroeconomics, like the war in Ukraine getting out of hand, China decides to invade Taiwan, another banking crisis, or inflation starts to rise again, then there's a possibility that the real estate market may be impacted. But the real estate sector itself remains strong. Well, I hope this information was helpful, and if you're interested in learning about the recent Federal Reserve's pause on rate hikes, please check out my video here. And if you want to learn about why Gilroy is attracting San Jose buyers, you can see this video here. With that, take care. See you next time.